Discussing some stocks that are going to be in focus. Devin Choksi of KR Choksi joins us on the show. Good morning, Devin. Thanks so much for joining in. Well, let's talk about Vedanta. What do you do with the stock at around 310? Analysts as well are confused because they keep paying out dividend, but that's more for the benefit of the promoters because they have to take care of their debt. What do you do at around 310? This has the capacity to make some wild moves.
Yes, Nigel. Good morning. Well, I think from the working point of view and the company's earning point of view, I think it has been a sustainable earning story, no doubt about it. And Hindustan Zinc, I think, is a cash cow as far as I think the business of the company is concerned. So, to my point, to me, I think this particular story remains convincing comparatively. I think in the other metal space, I think they're relatively better off. In fact, I think the group, I think, per se, basically, I think trying to systematically manage their balance sheet is a good sign. At the same time, I think promoters getting out of the debt, I think by way of this particular cash that they are receiving from dividend is also a good sign. So to me, I think the story remains intact. In fact, I think if one looks at it in last at least I think 5 or 6 quarters, if I put some it together and if my number goes right, I think the company has distributed somewhere around 110, 115 rupees per share kind of a amount as a dividend. So I think this is a significant amount of reward that investors have received only by way of dividend. Forget about the appreciation. I think that the working of the company remains intact. So from that perspective too, I think one can stay on with the investment.
Okay, stay on with your investment. The working of the company remains intact. You're talking about workings of a company, right? I mean, this whole debate on what's happening with Nykaa, where the management perhaps is focusing more on managing the stock price rather than managing the business. There are resignations on one hand galore, and on the other hand, they're announcing bonuses at the time of the lock-in expiring. So it's really muddled here. As a Nykaa shareholder, what would you do now?
Hi, Sonia. Well, I guess I think the view is not very different. The business model is trying to show some amount of, I think, uniqueness, but I would think that I think there is more to do with that eventually. Ultimately, I think any business is valued based on the profit that it produces and the values that it creates for shareholders. In my viewpoint, I think they are probably relatively higher as far as I think the hype is concerned at this point of time. Maybe I think the reality check is now happening. I would think that I think they systematically grow their business and sustain the activity thereafter could possibly be the end outcome eventually. As of now, I feel that I think given the size of the balance sheet, given the size of the profits, I think that the valuation-wise, the company is remaining a little bit more expensive even till date, even though the price has corrected from the IPO price. So stay away till the time I think it is a meaningful contribution coming to investors in form of ROC, ROE, and I think the earnings are concerned.
Just a quick word, Devin. Good morning. The last surge yesterday in the last hour, actually the last 45 minutes was led by IT names, Infosys, TCS, etc. And Reliance participated as well. I mean, day on day, it was not a big day for Reliance or these IT names as well, but incrementally there was a push. Would you look at them, would you look to buy any of them?
Yeah, Prashant, good morning. Well, I think forgetting about the expiry period and I think the resultant rollover trades, etc., just keep them aside for a while on technical side. The fundamentals of all these companies, particularly larger IT companies like Infosys, TCS, they remain extremely convincing. I've been, I think, saying this particular view that more or less, I think, world over, the IT platforms are basically, I think, now changing. And IT as a service provider is emerging and emerging very, very fast. So most of the corporate would possibly consume IT as a services hereafter, and I think that would be a P&L item more than I think a balance sheet item on capex side. Given that kind of a change which is happening, Indian IT companies' business model, I think remaining extremely well placed as far as I think connecting into the requirement of the world and major corporates. So from that perspective, I would not have much surprise in putting across a view that our companies, TCS, Infosys, kind of names, or even for that matter, LTTS and LTIS, Mindtree kind of combination. These kind of companies are remaining extremely strongly placed, I think, as far as I think the niche area of operations are concerned. I would think that I think 15-20% kind of growth rate continues for next 4 to 5 years, also seen from the visibility of the contract that they've been winning. So from that point of view, any corrective price or any subdued price in this case would invite more amount of investors into this stock. So not surprised though completely with the kind of move that these companies are recording. And Reliance, of course, to me appears to be a very convincing story. So certainly anything which is subdued in the pricing front would invite more investment at every point of time.
Okay. In fact, since we were talking about IT companies, as you said, I mean, the going has been very good and we have